So let's just say your mortgage is $1,000, and I just use these figures because it's easy math. Yeah. Okay, and I don't have to think about it. And let's just see that your mortgage is a 30-year mortgage, which is a big ripoff on its own. But it really doesn't matter what the mortgage is as long as where you're going to pay it right. So let's just say that you.
Why is it a ripoff? I don't understand. This is the lies so many people have been brainwashed. But let's keep watching.
Start your mortgage, say in September. Why September? Because next month is September. Okay, so you got September, then October.
First, I need to say this, right? Obviously, this old man is still teaching the wrong thing, and so many people are still tapping in and getting the wrong information. So I'm going to show you how it is supposed to be based on what he's talking about, but I'll tell you the right way to do it.
Then November, then December, then February. January. I'm getting ahead of myself. Okay, January, then February.
It's all over the place. It's all over the place. It's all over the place. Man, he needs to hurry up.
In April, May, and so on down the line, right?
So 12 months.
Yeah, so your mortgage payment is right $1,000 a month, right? So when you close, you should always ask for your amortization schedule, so you know exactly how much you're paying. And that more amortization schedule is an agreement, right? That you're going to pay X amount of dollars a month, and based on the interest, whatever it is, let's just say your interest is, say, doesn't matter, let's just say it's 8%. Okay, Now, if your payment is $1,000 the first month, right? Part of it is going to go to interest, right? And part of it is going to go to principal, right? Okay, so if it's $1,000 a month, you guys are realtors. How much is going to go that first month to interest, and how much is going to go to principal?
Like 99%.
You're right.
You might pay down $20.
Right. So let's just say
So yes, a lot of it's gonna go to interest. You know why it goes to interest? Because the bank gotta get paid. Come on now, the bank loaned you money, and they want to make sure you're gonna pay them back. They didn't ask you to come take money from them, but again, it's not a rip-off if you understand the system. So many people have been brainwashed thinking the banks is ripping you. Why are you busy counting the bank's money when you go count your own money? But we're gonna talk more about it. Let's keep watching the video.
that first month payment, your interest was $900, say, and $80, and only $20 was principal, which means out of that $50,000, you paid much of anything, right?
Right.
Okay, so now you paid that month. So is there a payment due next month?
Yeah.
Of course, there's a payment due every month, right?
Right.
So that next payment, once again, is $1,000, right? So how much is your interest?
70.
Right? No, it's going to be more like $978 or something like that, and so forth down the line, right? So now, if you look at these interest payments and you look at these mortgage payments, is basically what you're doing is that for that month of September, you borrowed $20, and they charged you $980 for that $20. But it is. But it's the truth, right? Yeah, because basically all you're doing is making 30-day loans. This is like juice money that you're paying. This is supposed to be illegal in any sort, It's like,
why is it illegal? They borrowed the money to buy a house. You bought your home with money from the bank. Why didn't you pay them? Why didn't you buy cash then? If you feel it's illegal, why did you buy the house? Did the bank ask you to come buy the house? Listen, I'm not a defender of a bank. I teach you how to be your own bank. But this information is so wrong. It's so full of lies. And folks, listen, at the end of the day, I need you to be a winner. You need to start winning when it comes to your money. Stop listening to fake social media experts. I'm documented. I'm going to show you what he's trying to say. I'll show you the right way to do it. I have my board. I'm going to switch the camera to my board later. Show you what he's actually trying to teach you, but he's not doing it correctly. And even the system, when I finish showing it to you, I'll tell you not to do it. But I'm gonna go. Let's keep watching. I just want to finish this because somebody sent this to me, so I want to address it.
So basically, you borrowed $20 that month, and they're charging you $980 for interest. So is there anyone at the table who wants me to give them $20 and next month I give me back $980? What would you say about me when I get up to go to the bathroom?
You a cold hustler. You stone.
You wouldn't be that nice. That'd be more like
Someone to a well.
Kellen, I don't care what you say. Your father is a crook.
Well, baby.
Yeah. So now, if that's the question, let's say I get ready to pay November's payment. Now watch this.
Okay.
So November's payment is still $1,000, right?
Right.
But what if along with that, so next month, November's payment, let's just say it's, for easy math, it's $980, which means that, say $20 again, $20 goes in interest. Okay, so what if when I pay this $1,000, I look down at my amortization schedule and I see what the interest is for that month. And I say, aha, the interest for the next month is going to be $22. What if I pay that along with the payment? I don't pay anything extra. I just pay the extra interest along with the payment the next month. Because I can prepay it, right?
Right.
Okay, if I pay that interest for the next month, have I borrowed the money for the next month? No, because I paid it up in advance. Right.
This is so confusing anyway. And why are you paying the interest? If you're why are you giving them the interest? There's a better way to do this. Even though I don't encourage that way, I hate it. But I'm gonna show it to you what he's trying to say. He's doing it all wrong. That's not the way you do it. You got to make extra principal payment. But I'll go over on my board and show it to you. And I used to teach this stuff years ago until when I was still caught up with a broke mentality. When you're wealthy, you think differently. And I want you to be wealthy. So we're going to talk about it. I'll show you how to do it correctly. And I'll show you the right way to pay off your house without you spending any additional money. Don't you want to know about that? We'll talk about it. Keep watching.
So what I do is I take the amortization schedule because the first few years of the mortgage, you're paying pennies on the dollar for interest, right? So now, Kelly and I work a deal together, and he says, Dad, since you helped me, I'm going to give you $1,000. I said, okay, cool. So he gives me $1,000. I say, well, I'm going to take the $1,000 and put on my mortgage here. So instead of just doing it willy-nilly, I go down and figure out what my interests are. But remembering, I got to make a payment at each month. Right. So I figured, okay, if I'm going to pay December, then I figure out what February is, and I get it up to $1,000. So if I do that based on what I've shown you, that might cover 3 or 4 years of interest right there. See, so when you think that you don't have the money to pay up early, right. So now I do that, and guess what? Instead of only having, at the end of the year, instead of having 29 more years left, maybe now I only got, say, 27 years left. And I keep doing that. If I keep doing it effectively, I could usually pay off that mortgage in about 7 years. So now when you start knocking the mortgage like that, go back to that example I've given you of buying those houses.
All right, folks. This is so fake, so ridiculous, not real, not true. At the end of the day, when it's all said and done, there's a better way to do it. He's not doing it correctly. He's teaching you the wrong things. You need to understand how to scale your wealth. At the end of the day, it's all about your money, your future self money. You got to remember, your dollar today is more valuable than your dollar in the future. I'm going to show you that it's very, very highly impossible for you to even pay the extra, interest, because the interest is so high. How are you going to afford to pay? You can't even do it yourself. This is something for folks that they're teaching you things that you are not going to be able to do. And even if you try to do it, why are you giving your wealth to the bank? The bank gave you a 30-year loan so you could take time to pay them. Why are you in a hurry to make them wealthy? Why are you trying to make the bank rich? Remember this. The rule is this. The banks, they make money by loaning money out. So get your credit right so you could get their money and use their money to make more money for yourself. There's no rush for you to pay off that mortgage. I told you I was going to show you on the board the way that I used to teach it years ago before I realized, you know what? I'm doing it all wrong. Why did I decide to change my mindset over that? Well, because my mentor, who happens to be a multi-billionaire, said to me, Douglas, you know it doesn't make any sense to teach your clients how to pay off their mortgage. I said, man, can you tell me more? What do you mean by that? He said, well, think about it. Why did they go get a loan in the first place? If they can't afford the house, why are they buying the house anyway? See, folks, home ownership is just a way for the American government and the banks to get into your mindset. That's why they called it a mortgage. You know, it's a mortgage, right? You go get it. Now the bank becomes your landlord. The government tells you, listen, when you get this mortgage, you're going to write off your interest. These are all brainwashing, but that's a different conversation for another day. Come into my mentorship class. Go to buildwealthwithdouglas.com, sign up for a one-on-one so I could put you in the right mentorship program for you. But understand this, folks. Let's get this right. When it's all said and done, banks make money loaning money out. Understand? Banks make money loaning money out. So if they make money loaning money out, why are you upset with them? You make money by investing your money so you could make more money, right? Nobody's upset with you when you do that. So if you loan money to someone, you expect them to pay you back. So here's the deal. I used to teach this old concept. It's an old concept. Folks, listen. Today's world, we are smarter than the old ways. You can't keep doing the same thing you were doing years ago and repeating it today. No, you got to change with the flow. This is why I'm constantly building wealth and growing my wealth, because I think different, think outside the box, and I'm open to hearing ideas and switch it, right? Unfortunately, so many people, they're so close-minded that they are not open to new ideas. But let's go ahead. Let me show you what the guy is trying to do. I'll show it to you, and I'll show you how I used to do it. So you've watched that. Now watch how it's supposed to be done. So what I've done, I've wrote it out. And what I'm also going to show you is that his concept don't really make any sense. Because first off, interest is always high. For the first 15 years in a mortgage, interest is high. You know why? Because the banks don't know if you're going to be alive. Come on. If you drop dead and they give you $100,000 and you drop dead the next day, how are they going to get their money back? The house don't have any equity in it. So now the bank got to find an investor like myself that have cash to buy it. But I wouldn't be interested in buying it because there's no equity. So it doesn't make any financial sense for me to buy that property. So understand, it's business, it's business, it's business. Don't take it personal. Understand the game. Once you understand the game, you could play. Unfortunately, so many people do not understand the money game. So let's talk about it. So I've broken it down just to keep it simple. So here's the deal. $100,000 mortgage, $1,000 monthly mortgage payment. So here we go. So if you send your first month, so I'm using 6 months for the example, okay? I'm going to show you how to pay off your mortgage in 15 years, making extra principal payment. So yes, you got to order your amortization schedule. I'll show you that. I'm going to do another video. I want you to see it. I want to show you an amortization schedule on a $100,000 loan, just to show you what it looks like. So you got to order your amortization schedule from the bank. They'll give it to you, or you can just get it on a website. Put your number, put your interest rate, put your mortgage amount, and you could go to the interest calculator website, interest.com. Write it down, interest.com. Put your information, and they show you the amortization for the next 30 years. All right, you got it. So in this case here, what you're gonna do is you send your $1,000 payment. That's your first month's January payment. So we're going to use January payment. So this is January, February, March, April, May, and June. Okay? So you're going to send your January payment plus February principal, which is just $50. All right? And you have to specify it on the statement. You have to specify that this is the principal payment, or else the bank has no obligation to apply it to the principal. Of course, because they don't want you to. Folks, listen. Banks make money loaning money out. Money doesn't do them any good keeping it, right? So they give you the money for the next 30 years. That's why I don't do 15-year mortgages. When I finance a car, I finance for the longest term possible, so my monthly payment will be lower. I wish we could finance cars for longer time too, longer like 10, 20, 30 years. You know why? Because my monthly out-of-pocket payment is lower. Think about it. I could take the difference in the money and go make more money. But man, I'm going off track. Let's continue. So that's $1,050. That means you just paid principal for February. So in the eyes of the bank, you don't owe February payment, but you're gonna do it again. In February, send another $1,000 payment plus the next month's principal, the $1,050. See what I'm saying? So you're always sending a principal. So again, you do it in March. Boom, you do it again, and you keep doing it until you're done in 12 months. So basically, what you've done, you've made 12 months payment. You did it in 6 months. By you doing that, now you've made, in the eyes of the bank, you've made 30 years payment. You did it in 15 years instead of 30 years. So if we do the math on this, if we do the math on it, $1,000 times 12 months, 1,000 times 12, that's $12,000, right? Times 15 years, that's $180,000. You just paid off your mortgage in 15 years instead of paying $360,000 over 30 years. Now, this sounds good, right? You love it, right? Bull crap. Don't do it. What do you mean, Douglas? Don't do it. It's the worst financial decision you would ever make, paying off this house in 15 years. So bad, so terrible. Now, let me explain why. First off, do you understand that this extra $50 that you're paying out of your hard-earned money could be going to a compounding interest account? It needs to be going to a compounding interest account to make you money. Compounding interest is the power. That's the wealth for you. Stop listening to all these fake people online trying to get your mind out of, get you out of the mindset of building wealth. Understand. Take your extra money and go make money. Put it in an account that you have control. Think about it, folks. Do you have control on your house? Can you go to the bank when you pay it off? Even if you listen to that guy some more, he said, well, then I could refinance. Folks, is it easy? How easy is it to refinance? How easy is it to refinance? You have to prove yourself to go get the money again. So what sense does it make to pay off the house, refinance it, put more cash out? Come on, folks. And you refinance and the interest rate is higher than where it was when you first bought it. And then you got to pay all these fees. Remember, there's closing cost fees, there's this fees, there's loan officer fee. There's so much fees that you got to pay to refinance. Not even talking about qualification. How quickly can you qualify to get the money? You got to show your pay stub. You got to show your W-2 income. You got to show your credit. Folks, why not put in an account that gives you quick access to your money? So understand this. I just wanted to do this and show you that there's a better way to do it if you want to do it that way. Or you could come into my buildwealthwithdouglas.com. Let's go into it. Let me look at your specific financial situation. And then I could guide you properly and show you things, real life stuff, my stuff that I do personally to build wealth for me and my family and help you scale. The key is to get you out of debt faster than you ever thought possible. Get rid of the interest rate, the high interest you're paying. Do you know for every dollar you pay, you make, every time you make a dollar, 34% of your dollar goes to interest rate. Credit card interest, student loan interest, mortgage interest, financing a car interest, 34%. And then 40% goes to taxes. So between the government and the bank, that's 74% of your hard-earned income that is gone. Nobody's addressing that. I address it, and I'm going to help you win. See at the top, click the link below, buildwealthwithdouglas.com, book a meeting with me. It does cost for the meeting. It's not free because to meet with me, you got to pay because I don't want to spend time with someone that's not serious. But I promise you one thing, it'll be the best dollar you've ever spent in your life. So listen, click the link, let's go, and let me help you build wealth for your family, protect your wealth for your family, and pass it on to the next generation.